And of course, when BlackRock got into this market in the first place, it was a massive wave. The Bitcoin product, of course, had near record levels of demand for many types of ETFs, let alone something in the crypto world. How do you explain Ethereum to the average person here? Is there a very large difference in how you see interest really being drummed up for this versus Bitcoin?
Sure. Well, Sonali, Tim, great to see you. Thanks for having me on. They are very different. You're right. And I think that the simplest way to think about Ethereum is that it is a bet on technology innovation around blockchain. And that's quite different from when we think about Bitcoin as this prospective emerging global monetary alternative. And I think that's important for investors to keep in mind, is that we really view Bitcoin and Ethereum as complements, not as competitors or substitutes.
Well, it's interesting, too. I was talking to Eric Balchunas over at Bloomberg Intelligence. 250 million in volume is what ETHA, if you want to call it that, is given towards the end of the day today. That would put it very high up there, one of the top 50 best fund launches. It would also mean, as a group, the group would be doing about $1 billion in volume. Is that a success?
Well, I think we're thinking much longer term than any one day's particular volumes or inflows. But when we think about success in this space, it starts first and foremost with delivering a BlackRock and iShares quality access vehicle to our clients, as well as a lot of what we're focused on, similar to Bitcoin, is being a great thought partner on the education journey around Ethereum. As you note, it's even more complex in some ways than the education journey around Bitcoin, which obviously we spent a lot of time with our clients on.
So if you are thinking about this longer term than just today, of course, that certainly makes sense. But what would be a realistic assets under management in this ETF in the next 12 or 18 months? What's the number you want to see?
Yeah, well, I think it's tough to project that. There's obviously a lot of
but you got to have
unknowns
goals.
in the
market. You got to have goals internally.
Well, I think if we look at the case of IBIT and the Bitcoin ETFs, that was pretty extraordinary, right? IBIT today at 22 billion in AUM after just more than 6 months. That broke a lot of records, obviously, in ETF fund launches. But there's a lot of room for success and significant AUM gathering, even that would fall below that very lofty bar.
Apart from minuscule differences when it comes to fees, how do you differentiate from the other products that are out there?
Yeah, well, I think that BlackRock and iShares have built a reputation, have built themselves into the leading ETF issuer in the world. We spent multiple years, starting in 2021, building a technology integration with Coinbase Prime into our Aladdin system, such that this ETF, just like IBIT, can run on the same technology and risk system that the other 1,300 plus ETFs globally for iShares do.
Let's talk a little bit about Ethereum versus Bitcoin here in the regulatory structure, right? And by the way, Rob, has the SEC even come down that hard on the crypto world if you think about two spot ETFs?
I was thinking the same thing.
What is everyone complaining about? I get the suits against the exchanges, but still, under this administration, you have seen two major spot ETFs launched. How far down the road can you go with still the remaining regulatory uncertainty? And by the way, there's tons of it.
Right. Well, I think it's a really beneficial thing for investors and for markets. What's happened with these ETFs, they've brought access to these assets, which many investors clearly have wanted. And I've been excited to get the opportunity to hold through an ETF, and brought that into a regulated environment into these wrappers. There's a ton of demand from our clients, clearly, to be able to access the leading crypto assets within the exchange-traded wrapper. And so it's been a great year from that standpoint.
As Sonali mentioned, we've seen the launch of Bitcoin and Ether ETFs under SEC Chair Gary Gensler. But there has been a lot of discussion in recent months about how much friendlier Trump administration would be to crypto. Certainly the crypto industry is vocal about that. What would be different, if anything, under a Trump White House than a Biden White House or a Harris White House?
Right. Well, I actually think the meaningful shifts that we've seen has been over the course of 2024, you've seen this clear growth in recognition generally from a congressional standpoint that there's a need to develop effective regulation in this space, regulation that supports innovation and also protects investors. And that actually has been bipartisan. So that's probably the most notable thing that we've seen is the emergence of this as a bipartisan concept.
Rob, how much institutional interest is there in blockchain products outside of the ETF wrapper?
Well, I think there's a fair bit. You've seen activity around tokenization. Think about the activity that's happened around stablecoins. When we think about the digital asset space, we think about it across three pillars. It's crypto, it's stablecoins, and tokenization. Many of our clients are interested clearly in investing in Bitcoin and in Ether, but they're also interested in some of these other technology applications, particularly around tokenization.
AI is certainly a theme that many investors are excited about. Curious if there are any actual real significant spillover from developments when it comes to AI into digital assets. Can you give us some examples of that?
That's a great question. When we think about longer term, and this is, there's many things that are, of course, uncertain in the way this will play out. But you think about internet native money, which is what Bitcoin brought into being. Crypto speaks the language of computers, right? So when we think about potentially greater role for AI in our economy, this is a technology construct and a way of money existing that actually fits pretty integratedly with that. So we'll see.
I'm really curious in how, we're going back to regulation for a minute, just the dynamics about Ethereum and the world of staking. How does that change the dynamics between kind of the spot Ethereum market and the spot Ethereum ETF market when there's so much uncertainty around the business of staking?
Sure. Well, I think obviously all the Ethereum ETFs that launched today do not do staking, right? That's consistent across all of them. And the way the staking works is a fascinating new construct, that Ethereum and other blockchains have brought into being. When we look at the way Ethereum's held today, though, only about 29% of all ETH is actually staked. So certainly there's a bifurcation between those who are holding it and choosing to stake it and those who don't.